Welcome to the show, guys. Listen, I'm glad to have you here. Now, today is Tuesday, the April 17th, 2017, and what we're going to do is we're going to start the charts right here. Okay, now, first thing we're going to get into is the bonds. And the reason why we're going to start here on the bonds is because these bonds are the whole key to the stock market. What you do is you see the stock market kind of leveling out. Well, that's because the bonds have been kind of level lately, you know. Let's go to the U.S. 10-year, which is really the key bond that we need to look at here. And what we see is the stock market had a bad time right up until this point right here. See this rise in the yields? It started down here in the bottom. It started on the 9th, 8th, 2017. That was really kind of the starting point. And it rose all the way up until right here, the second, about the 2nd to 20th, 2018, where it was it made 2.94 or something like it around there, you know. And there was a steady rise in these yields. These yields went all the way from down here in a low. Let's see, what was the low? Around 2% all the way up to almost 3%. So there's a 1-point rise in yields. Now, what happened was since then? So since then till now, we've seen a downshift. And we can find a bottom right here at this point, and then shift back upwards again. So what we're looking at is this is what's controlling the market. The market troubles were right here when the yields were rising right in here. That's where the market troubles were. And the market has been pushing along, so basically finding a stability. It's found stability again. It's becoming more stable just recently. And so now we're going to switch over to the market, and we're going to take a look, and it should be open any second now. Is it still that close? Yeah, but it should be open any second now. They should start this market. We're right on the time. I've been waiting for it to start. It should be starting right away. Let me refresh the page. It might have started. Market open. Yeah. Up 230 points at market open. It just opened just now. 234 points up today. But this market, if you take a look at it, what you see is it's finding a stable point in around 25,000. That's what I said. I think this peak is going to be around 25,000. And I said that about, I don't know, maybe a week or two ago, back when the market was down in around here, and everybody was saying the market was going to crash. I said, well, you can go back and listen to what I said a while ago when this market was down in here. I said 25,000 is the stable point, and now that was what I was shooting for, and it's at 24.8, and I think it's probably going to make a peak at around 25,000, which has got to go up a little bit higher, and then she's going to go back down probably a little bit, not that much, and then it's going to keep wobbling like that. But we're not going to go back up to this peak right here. See this peak right here, 26,616? I don't think we're going to make it back up to that peak before the big crash. I think it might try to make it up as high as maybe 26,000 before the big crash comes in the next little while. But we're not going to make it back up to 26,616. That was the big peak in the market. Now, after all this is over, and after we have the big crash, then we're going to go right on by that 26,000. And how high do you want? 50,000, 100,000, 200,000 Dow Jones? You're going to go right on by. You think I'm talking crazy when I say 200,000 Dow Jones? You're going to see at the end of my program here why the Dow Jones could go actually that high. Okay, so now let's take a look at cryptocurrency. Bitcoin has been going along and quite stable here at 8103 right now, and there's stability here. in this price range right here. It's been quite stable. It looks to me like today it's going to just go along mostly stable at this price range. We had this big shoot up in price right here. And I didn't expect this big shoot up in price. What I expected was a slow climb up to 8,500 or maybe as high as 10,000. In the short term, I could see it going as high as 10,000, but I expected a slow climb. I didn't expect this big green arrow, big green candle to take it up like that. I expected it to slowly rise. Anyway, regardless, it did exactly as I expected, and I expect it could go as high as 10,000 before the big market crash. Silver price today. Silver price today it's kind of range bound, 1668. It hasn't really broken out yet. I don't think it's kind of following in a range around 1660. Actually, that's not the range. The range is between, let's say, right now the range is between like 1680 and 1620. Something like that, you know, that's the range, but it's in the middle of that range right now. What we need for a breakout is we actually need silver to go above $20. That would be a breakout. I would say, hey, you know what? We got a breakout in silver if I see silver go up above $20. I ain't seeing it. I ain't seeing it. Silver has been staying down here, and as long as it's between, say, $18 and $13, then I'm just saying, well, it's just they're still keeping up the manipulation, you know. That's the thing. And so we're right in the middle of that, between $18 and $13 at 16.68. We're right in the middle of that. They know exactly what they're doing. Mining production costs, all in, that's all in, is around $14. And they got it at 16.68, so the miners are making like a little bit of just a little bit of profit, just enough. But they got the price suppressed as low as they can possibly suppress it without cutting off mining production. And they know, and they got it right at that range. They're not going to drop. Really, I'm telling you honestly, I don't believe, now this is not financial advice, but I don't believe they're going to raise the price of silver any higher than this, and I don't believe they're going to knock it down any lower. So it's almost like money in the bank buying silver at this price, but it has the upside potential is unbelievable. Downside risk, not that much. So it's actually a lot better than money in the bank, because you have to understand, with your money in the bank, the bank looks at you as what's called an unsecured creditor to the bank. In the old days, you used to be, the definition of the bank used to be, you were a depositor, and they were holding your money. Now it's changed. They've changed the whole definition, and now what you are is an unsecured lender to the bank. And that money is not yours. As soon as you give it to the bank, it belongs to the bank, and they can do what they want with that money. They don't have to give it back to you. By all means, they can keep it all, every penny. And they can just lock the door in the front of the bank, and you got no legal recourse whatsoever. And as far as the Federal Deposit Insurance Commission is concerned, they've only got enough money to cover of all the deposits of all the banks in the United States of America. If you were to take into account all the deposits that are insured by the FDIC, they've got enough money, the FDIC, to cover 0.6 cents on every dollar. That means that you wouldn't even get 1 penny on each dollar. You would get 0.6 of 1 penny. 0.6 of 1 penny. That means if you've got $1,000 in the bank, that's if the FDIC were to distribute all of their money evenly across the depositors. Now, they've written it into law that the big shots are going to get first crack at it. The big depositors are going to get first crack at the FDIC money. So what are you going to get in the end if there's banks closed? That FDIC insurance is a total farce. It's absolutely useless. It is absolutely meaningless. It just makes you feel good. It makes you feel like, hey, you know what? I got insurance on my money in the bank. And it's really no insurance. You don't have any insurance. You're riding free with no insurance whatsoever. And also, the bank is fully within their rights to keep your money and not give any of it back to you if there's some sort of a catastrophe or whatever, a banking catastrophe, financial crisis, whatever. Your money's gone. Now, silver in your own possession has very limited downside risk. You become your own bank with silver in your own possession. It has very limited downside risk, huge upside potential. And they're just barely keeping it above mining costs right now. So it's great stuff. It's not financial advice, but I think that everyone should probably have a little bit. But you got to be careful where you put it. You just can't lay it on the kitchen table, or you'll come home and it'll be gone. You know, you got to do a little bit of research into how to store and protect it. And that's what you got to do. You got to do what you got to do in this system that we got right now to protect yourself and your family. So next we're going to take a look at oil prices. Oil prices are at 65.81. 65.81. We got a little bit of a drop today, but it's insignificant. Still, if we take a look here at the 5-day, let's take a look at the 1 month. It gives us a better picture. Actually, that's not giving us that great a picture. Neither is that. We got to go to 6 months. Come on, Holland, 6 months. Okay, let's try 1 year. Sometimes I hate these particular charts. They won't give me the charts I'm looking for. But the overall trend has been upwards. Even though we've had a little bit of a slump right now, and the overall trend is upwards in oil. How high will it go? I think that it's getting toward the top in the short term, it's getting toward the top of how high it's going to go. Cryptocurrency market capitalizations, $331 billion right now. And we see most of the coins are in the green. Litecoin's 136. Ethereum's 514. Ripple's 66 cents. EOS is $8.73. IOTA is $1.63. Stellar is 29 cents. Cardano's a quarter of a dollar. So you can buy yourself 4 Cardano for $1. I mean, that's pretty good. It's better than going out and getting that piece of sweet caramel glazed sugary dough that you buy with your coffee. It goes with your coffee for $1. Buy yourself 4 Cardanos. You know. Anyway, Bitcoin Cash, $778. So now we're off to take a look at the U.S. dollar index. 89.59. It's still been following that range of between 89 and say 91. Along in there. It's been in that tight little narrow band. Just like silver's been in a tight little narrow band, so is the dollar index lately. Now this is where it gets interesting. We are going to talk about hyperinflation, and I want to visually show you what the Venezuelan currency was pegged to the dollar 1-to-1. So that heap that he's got right here in his hands, I'm bringing the camera in so you can see, so you can get a close look at this. That heap that he's holding of $100 bills, not a long time ago, a very short time ago, was worth the exact same as U.S. $100 bills. That big heap. And you notice how they wrapped them with elastic bands? They wad the bills together, they wrap them with elastic bands. They'll be doing exactly the same thing with the U.S. dollars. This is exactly what's going to happen with the U.S. dollars. Now, right now, that big heap of Venezuelan dollars that he's holding there is only worth as much as that $1 U.S. dollar. So that whole heap is worth $1 U.S. dollar right now. That's what hyperinflation has done to the Venezuelan currency. Okay? That's what's going to happen to the U.S. dollar, the exact same thing. Then they're going to have to do a reset. When they do the reset, you're going to be able to exchange your old U.S. dollars that are almost worthless for a new cryptographic dollar. And that cryptographic dollar then is going to take on the value. They're going to give you a limited period of time to turn them in. And so you're going to have to wrap them all with elastic bands and turn them in. When that time limit is over, then they are going to decommission them so that they have no value. At that point, they probably still continue to use them on the black market for a while, but you won't be able to take them to Walmart or any place like that. They won't accept the U.S. dollar anymore. You'll have to have the cryptographic U.S. dollar, and you'll have to pay from your phone, more than likely. It'll be set up as cryptographic, and you'll pay from your phone. This system has been working its way in with the cryptocurrencies for a long time now. It's becoming, they're getting to the point where it's pretty easy to use now. It won't be hard for them to turn all the stores over to this. It'll be all on your phone, and everyone will have to have a phone if you want to buy anything. This is the way it's going to go in the very near future. So this is why they've already set it up so everyone has phones. What was that? Anyway, so let's take a look at this. What hyperinflation will buy you right now in Venezuela, what it costs for different items, basic items in Venezuela. So 1 kilogram of cheese costs $2 million, right? Now you have to understand something, that the price of silver has went up to, I think it's 2 or 3 million for a price of silver now, for 1 ounce of silver. So, you know, a kilogram block of cheese is a big block of cheese. It's 2.2 pounds of cheese. It's a big block of cheese. So a big block of cheese costs you 1 ounce of silver. Now here in America, how much does it cost for a big block of cheese? $20. You getting the idea? It's the same thing. Silver has retained your purchasing power. So you can buy the block of cheese. But what about the guy who had 2 million Venezuelan dollars that was worth 2 million American dollars a few years ago in the bank, and he left that in the bank now? What can he buy? Well, he can still buy that 1 block of cheese. And so his $2 million now has turned into 1 block of cheese or 1 ounce of silver. But the silver, if he had went out and taken that $2 million back when it was worth $1 to 1-to-1 ratio, how much silver could he have bought? He could have bought monster boxes, enough to fill a dump truck with monster boxes of silver. And right now, how much cheese could he buy? He could buy the whole cheese factory. So yeah, you can see what's happened, and this is why it's important to get out of the other fiat currencies before they do this, before the U.S. dollar is going to do this, you know. And if you're in gold and silver, you're going to be able to, well, look at this. 2 toilet paper rolls, $399,000. Okay? Mayonnaise, a jar of mayonnaise, $955,000. Ladies' deodorant. Do you want to smell fresh smelling, ladies? $890,000. Margarine, $740,000. A box of oatmeal, 400 grams of oatmeal, $550,000. These are the prices. So, what do you think? Look, some chicken and some bacon, $2 million, you know, dollars. So what do you think, people? Do you think that priced in dollars, that an ounce of silver could be worth $1 million? And what about a Bitcoin? A Bitcoin would be an awful lot more than $1 million. Because a Bitcoin would be like, 1 Bitcoin would be like massive. It would be like 1,000 million, $1 billion a coin. I mean, it's just, how high can this stuff go? Priced in dollars, if the dollar is going into a hyperinflation and this is how it's going to look right here. Except these will be dollars wrapped in these bundles with the elastic bands around them. And what'll happen is they'll give you a limited time to turn them in for the new currency. And this is what's coming. So if you want to keep your money in your bank account, not only does it pose the risk that the bank could keep it all anytime they want because you're an unsecured lender, but also it poses the risk that they're going to inflate away the purchasing power of those dollars you have in the bank. So you got to start protecting yourself and your family now. Now while you still can. While your dollars still have a lot of purchasing power, especially in silver. And silver is gold's good too. If you've got a lot of money, I would suggest if you've got a lot of money, for you guys out there, most of you guys out there, silver is the way to go, right? But if you guys got a lot of money, you guys out there got quite a bit of money, go with gold and take your gold and find a secure place to put it in your own possession. I don't know, maybe where you'd put it to hide it, but if you got a lot of money, maybe you could do that, quite literally. But for most of you guys like me and most of you guys out there, a little bit of silver, when you get paid, you can buy an ounce now and again, and this is the way to go. Try to get yourself some fractional silver. What I mean by fractional is, that it's small. It's like 1/10 of an ounce per coin, dime-sized coins. Dimes, U.S. silver dimes are great, 90% silver. They have like old barber dimes, and they have mercury head dimes and stuff you can buy, and pre-1965 U.S. dimes. And you can buy a roll of those dimes. They are going to prove to be great. If you could buy a roll of those dimes, say once every several months, and put them away for yourself, if you're an average guy like me and all these average guys out there, put a roll of those dimes away for yourself every so many months, every quarter, say every 3 months, put a roll of those dimes away for yourself. You're doing something. You're doing something for yourself and your family that's going to protect you when the hyperinflation hits. You'll be able to take one of those dimes and you'll be able to feed yourself. Where these other people out there, they're not going to be able to feed themselves, even if they've got $100,000 in the bank right now. How far is that going to go when the U.S. dollar is like he's holding all that Venezuelan dollars? Look, he's got like $500,000 there, and he's like offering it to that guy for like $1. Anyway, thank you guys for listening to this this market report, and we'll catch you guys in the next episode. Bye-bye.